Apple versus Microsoft, the two most valuable companies on the planet, both worth over $3 trillion, both dominate their markets, but if you're building a portfolio in 2025, which one deserves your money? I'm EA Snap, and today we're breaking down Apple versus Microsoft in the ultimate tech stock comparison. We'll analyze their business models, financials, competitive advantages, and valuation to help you decide which, if either, belongs in your portfolio. These aren't just tech companies anymore. Apple is a luxury brand with a services empire. Microsoft is a cloud computing powerhouse with AI dominance. The question isn't which is better, it's which fits your investment strategy. Quick legal note, this is not financial advice. I'm not a financial advisor. This is purely educational content. Always do your own research and consult professionals before investing. Let's dive in. First, let's understand how these giants actually make money. Apple. Apple's business model is beautifully simple. Premium hardware with a sticky ecosystem. The iPhone, 52% of revenue. Still the cash cow. Over 1 billion active iPhones worldwide. Average selling price around $900, $1,000. Services, 22% of revenue. This is the growth story. Apple Music, iCloud, App Store, Apple TV Plus, Apple Pay. Once you're in the ecosystem, you keep paying monthly. Mac, 10% of revenue. Premium computers with improving market share, thanks to their M-series chips. iPad, 7% of revenue. Tablet dominance, though growth has slowed. Wearables and accessories, 9% of revenue. Apple Watch, AirPods, and other accessories. Here's Apple's genius. Hardware gets you in the door, but services keep you locked in forever. Once you've got an iPhone, Mac, iPad, and Apple Watch all sync together. Switching to Android or Windows becomes nearly impossible. That's not an accident. That's strategy. Microsoft. Microsoft's transformation over the past decade is incredible. They went from a Windows-dependent dinosaur to a cloud computing beast. Intelligent Cloud, 43% of revenue. This is Azure, their cloud platform competing with Amazon AWS. Also includes enterprise services and GitHub. This segment is growing 20% plus annually. Productivity and business processes, 34% of revenue. Office 365, LinkedIn, Dynamics 365. Think Microsoft Teams, Excel, Word, everything businesses need to operate. More personal computing, 23% of revenue. This is Windows, Xbox, Surface devices, and search advertising through Bing. Microsoft's brilliance, they pivoted from selling software licenses to subscription services. Instead of buying Office once for $400, you now pay $10 a month forever. That's recurring revenue, and investors love recurring revenue. Plus, they're absolutely crushing it in AI. ChatGPT runs on Azure. Microsoft has integrated AI into every product. They're not just riding the AI wave, they're creating it. Now let's compare the numbers that really matter. Revenue. Apple fiscal 2023 revenue, $383 billion. Microsoft fiscal 2023 revenue. $201 billion Apple generates nearly double Microsoft's revenue. But here's the thing. Revenue size isn't everything. Let's look at growth. Revenue growth. Apple revenue growth, YoY, 2.8%. Actually declined slightly. iPhone sales were soft in 2023. Microsoft revenue growth, YoY, plus 6.9%. Steady growth driven by cloud and AI. Microsoft is growing faster. Apple's size makes hypergrowth difficult, but they're also facing market saturation, especially with iPhones. Profitability. This is where Apple flexes its muscles. Apple net profit margin, 25.3%, one of the highest margins in tech. Microsoft net profit margin, 36.7%. Wait, Microsoft is more profitable? Yes, software and cloud services have better margins than hardware. Microsoft doesn't manufacture physical products at Apple's scale, so their costs are lower. Earnings per share. Apple EPS 2023, 6.16. Microsoft EPS 2023, 11.11. Microsoft generates nearly double the earnings per share. That's significant for long-term value creation. Free cash flow. Free cash flow shows how much actual cash these companies generate. Apple, FCF, $99.6 billion. Absolutely massive cash generation machine. Microsoft FCF, $68.4 billion. Also incredible, but Apple wins here. This is why Apple can return so much cash to shareholders through buybacks and dividends. Balance sheet. Apple's cash position, $162 billion with $111 in debt, so net cash around $51. Microsoft's cash position, $111 billion with $77 in debt, so net cash around $34. Both have fortress balance sheets. Zero concerns about financial stability for either company. Competitive advantages, the moats. Warren Buffett talks about moats, competitive advantages that protect a company from competition. Let's examine each moat. Apple's moats. 1. The ecosystem lock-in. This is Apple's superpower. Once you own multiple Apple products, switching becomes incredibly painful. Your iMessages won't work on Android. Your AirPods won't work as well. Your watch won't sync. Your photos won't transfer easily. This creates massive switching costs. 2. Brand power. Apple isn't just a tech company. It's a luxury brand. People line up for new iPhones. They pay premium prices proudly. That brand loyalty is nearly impossible to replicate. 3. Services recurring revenue. 1 billion people paying $530 a month for various Apple services creates a stable, predictable revenue stream. 4. Vertical integration. Apple designs their own chips, M series and A series, software and hardware. This gives them performance advantages and control over the entire user experience. 5. App Store monopoly. Every app sale on iOS, Apple takes 15 to 30%. That's a toll booth on the digital economy. Microsoft's moats. Apple. 1. Enterprise lock-in. Once a company uses Microsoft 365, Azure, and Teams, ripping all that out is nearly impossible. Migration costs are enormous and employee retraining is painful. Companies stick with Microsoft for decades. 2. Cloud infrastructure network effects. Azure gets better as more companies use it. More users mean more features, better reliability, and lower costs. This creates a flywheel effect. 3. AI leadership. Their partnership with OpenAI gives them exclusive access to GPT models. They're integrating AI into every product before competitors can react. 4. Developer ecosystem. GitHub, Visual Studio. Net, millions of developers build on Microsoft platforms. That creates dependency. 5. Gaming platform. Xbox, Game Pass, and the Activision Blizzard acquisition create a massive gaming moat. 25 million Game Pass subscribers paying monthly. Both have incredible moats. Apple's is consumer-focused and emotional. Microsoft's is enterprise-focused and practical. Neither is going anywhere. Valuation. What are you paying? Great companies can still be bad investments if you overpay. Let's check the price tags. PE ratio. Apple PE 29.5, Microsoft. PE 35.8. Microsoft is more expensive on a PE basis. You're paying $35.80 for every dollar of Microsoft earnings versus $29.50 for Apple. Forward PE 2024 estimates. Apple forward PE 28.2. Microsoft forward PE 32.7. Still more expensive for Microsoft, but the gap narrows slightly as their growth is expected to continue. PEG ratio. PE divided by growth rate. Apple PEG 3.2 above 2.0 suggests potentially overvalued for its growth rate. Microsoft PEG 2.4 still elevated but better than Apple. By this metric, Microsoft offers slightly better value despite the higher PE because their growth rate is stronger. Dividend yield. Apple dividend yield 0.50%. Microsoft dividend yield 0.78%. Neither is a dividend powerhouse, but both steadily increase payouts. Microsoft edges out Apple here. Price to sales. Apple PS 7.5, Microsoft PS 12.6. Apple looks cheaper here, but remember, Microsoft's margins are higher, so sales convert to profit more efficiently. Valuation verdict. Apple is slightly cheaper on most metrics, but Microsoft's superior growth justifies its premium. Neither is a screaming bargain, but neither is absurdly overvalued either. Alright, after all that analysis, here's my take. Choose Apple if you want. Stability and reliability. Apple prints cash like clockwork. Strong brand moat. Consumer loyalty is unmatched. Better relative valuation. Slightly cheaper on most metrics. Massive buyback program. They're reducing share count aggressively, boosting EPS exposure to consumer spending. If you believe in consumer strength, Apple benefits. The risk? Growth is slowing. iPhone saturation is real. They need the next big product category, Apple Car, AR glasses, to reignite hypergrowth. Choose Microsoft if you want. Faster growth, cloud and AI are expanding rapidly. AI leadership, they're ahead in the AI race through OpenAI partnership. Enterprise stability, B2B revenue is stickier and more predictable than consumer diversification. Cloud, productivity, gaming, multiple growth engines, secular tailwinds, cloud adoption and AI are multi-decade trends. The risk? Cloud competition from Amazon AWS and Google Cloud is fierce. They're also more expensive on most valuation metrics. My honest opinion? I'd own both. These are two of the highest quality companies on earth. If forced to choose one, I'd slightly lean Microsoft for the next 5 years because of AI and cloud growth. But Apple's moat and cash generation make it a phenomenal long-term hold too. A 60-40 split. 60% Microsoft, 40% Apple gives you growth and stability. Or just buy QQO or an S&P 500 ETF and own both without having to choose. That's my deep dive on Apple versus Microsoft. Two titans, two different strategies, both incredible businesses. Drop a comment. Are you Team Apple or Team Microsoft? Or are you owning both? If this breakdown helped you, hit that like button and subscribe for more stock analysis and investing content. Disclaimer reappears. Remember, not financial advice. Markets are unpredictable. Do your own research. Consult professionals. Thanks for watching, and I'll catch you in the next one.